Yeah, g'day. Another day. Right. Last night we had the CPI print. That was last night Australia time, so it would have been early morning US. It came in quite high. We came in at about 4.5, so it's quite a decent sort of print there. Um, oh, sorry, 5.4 for the year on year. 4.5 was excluding food and energy. That is a interesting point to the year on year, because you're comparing it also to a point where we were at pretty much a extreme deflationary point just while there was sort of lockdown, just coming out of those lockdowns, and a lot of the stimulus hadn't been passed through. So there was not much happening at that point last June. Now, going forward, I think towards the end of the year with these kind of prints, I think we're going to see the 10-year Treasury start to ramp up. And if we have a look at that, we are coming in, let's go zoom into 3 months, but you can see that correlation I talked about with Bitcoin, and you're going to see that increase, I think, going forward. We're going to see the 10-year basically start to ramp up, I think, from here due to this inflationary narrative going forward. And that's going to probably come to a standstill towards the end of this year or start of next year, when you start comparing it to a point where most of the inflation had already occurred. So if we compare currently to the start of this year, inflation would be a lot lower. The prints, I think I have we've got a quick, so you can see it just ramped up. You are getting some higher prints, but if we say we don't hit, we get maybe 275 or 274 or something like that, prints going into the next few months, that could really dampen that off. And if you think we're comparing it back down to that point where it was 258, like that's a huge run up. If we start to compare it to a similar point, so we're comparing it to here and it starts to flatten off, we don't get this same increase. It has jumped up a lot in the last month, but I don't anticipate that to continue at that same degree as the sort of transitory effects of it roll over. Obviously, there's going to be some things that are in extreme inflation, other things are not. But let's go back to that 10-year. I think we're going to see it jump up over 1.45. Will sort of trigger the crypto markets to go real bullish. I think that will start to drive crypto again. We'll see this nice undercurrent form there that's going to push us up. If it fails to break that sort of trend, I think the 2021 cuts through it nicely. There we go. Sort of, you can see there, if we the green SMA is basically showing if we can get above that, we've broken this downwards trend on the 10-year Treasury, and that will be a good catalyst for a bull run. But if we keep on breaking down and we take out that 1.3 bound, I don't think that's too good. That's probably set us on a path for at least the next 6 to 12 months of either sideways or down action. And it may creep as well. We might just see a lot of the volatility get hammered in crypto in that scenario, and we just travel sideways or maybe down. We might hit 20k. Don't think it will go any lower than 20k on Bitcoin, but who knows. And let's sort of overview. If we compare, you can see we've ramped up, we're coming down, basically traveling sideways a little bit down. If you look at the overall trajectory, it's still trending a little bit down. But like there's a high chance that this just ramps up now. If we suddenly get the inflation narrative push out to the debt markets, that is going to push up these risk narratives possibly. The problem is they're always thinking about, especially the bond market's always thinking about the reaction. Same with like assets like Bitcoin and gold. They're always thinking about, oh, what happens if there is higher inflation? What are the central banks going to do for policy? How's that going to affect the availability of credit? And so you've got that happening at the same time, but it's whichever wins out. And I think with this higher print, we're going to rally up to the end of the year and dump really hard going into the new year. Even like if we start to go up and we take out the 65k range, I am going to be getting ready to exit in probably mid-December kind of thing, because as soon as that CPI print comes out for, say, November, I anticipate that to already be backing off quite substantially. And you might see December's one when it comes through in January, and the following 2 months that could come in a lot. That could come in either the same or even lower. If we have like a massive oversupply, like we're seeing with timber and the likes now, where you suddenly got all this extra come online, there's a chance that something goes wrong, and there is enough of a catalyst there. And I think you need that. You need that big deflationary event for them to take the next step in monetary policy. They might not even have to raise rates, because they will get the same effect by having a CPI that suddenly drops off, and they'll go, well, we're basically losing the inflation that everyone thought we were going to have, so that allows us to do more stimulus. But that might take a little while as well. There might be a 20-30% market correction in between that, and then they can come in and offer more QE, offer maybe negative rates like they're talking about here in Australia, and that could really pave the way for a nice dip buying opportunity in there for taking sort of getting back into crypto if you've sold out in December, or we go into longer term bear market because there's just not enough stimulus coming through and the QE's not really filtering into investments. Right, keep this short. Catch you later.